Hi.
Hello there. How is everyone? I moved everyone to push to talk, so if you want to talk, you gotta set up push to talk just to control the sound a little better.
I forgot what my push to talk button was.
I don't think you need it. I think you're exempt.
No, I'm not.
Oh, you're not. Okay, your name's just so long that I can't see. What's up, everyone? Just waiting for some more peeps to join, and then we'll get started. Put a couple tips up on my screen that I'll go over some general Q&A questions that I've been getting DM'd, and then we can open up to everyone just to ask general questions on what they've been struggling with, and hopefully we get some nice answers and get people a little bit more confidence in their trades. And I think it's a lot of it is just having a strategy that you feel comfortable with, but there's also some general tips that just are smart ways to enter. So I think a lot of it people get caught up with, like the lottery plays and the 400 to 800 percenters, but that's not realistic to do that every time. And if you chase those every time, you're going to end up losing all your money because you're going to hold it for too long, and things like that will happen. So I think I'm going to use Facebook here. I think it's a good example of something we thought was going to go well, but did not go well today. So if we zoom in here, say in like the 5 minute. So today we, for instance, get my little, where is it? There it is. So we saw this zigzag down here, and then it bounced on support down here and made this tweezer bottom. So I know a lot of people got in around like 353. We played it up, but I think a lot of people got stuck in this, and then they were bag holding all day. Where in reality, when this rejected the uptrend, you should have at least trimmed some of your profits. So let's say you took 5 contracts, maybe you sell 2 or 3, because you can also see there is a downtrend up here as well, and that would have, even on like the 5 minute, that would have looked like something like this. Let's just redo that on the 5. I did it on the hourly to start when I was waiting, but so even on the 5 minute, we could see it couldn't get back above these highs over here. So you probably would have had a breakout zone somewhere in there. So when it rejected here, you should have sold at least half your contracts, and then when it came back to below this support line here, when it had a second red candle, you should have cashed out completely, at least securing some profits on the day. I think that's a lot of times people want to chase those 200 percenters because they're like, Facebook's breaking out, this is going to go to 380, 370. I want that 500% where you could get 10, 15, 30% out of this trade, depending on what you did. So let's say, 716, maybe you buy, if you're just day trading, maybe you buy or let's see, 7.7 today. So, hold on 1 second. Sorry, my daughter's trying to escape her bed. um, if it breaks out, great. But if it doesn't break out past your breakout point, just take your profits and look for another trade. And if it does break out, get back in and ride it up. It's fine. In terms of like buying contracts for this, a lot of people struggle with that as well. And I saw that, people don't know how to properly buy the correct contracts to mitigate risk. So I wrote some general rules up over here. Oops. What's going on? Oops, nope, didn't want to do that. So generally, if you want to play safe, give yourself a worthy stop loss. First of all, you want to pick stocks. If you want to use a trailing stop loss, let's say you work, you got meetings during the day, you can't look at your phone, can't look at the stock all day, and who wants to do that anyways? Unless you're like me and wants to sit on voice and look at stocks all day. But generally, you want to go deep in the money to negate theta. So that's sometimes 2, 3, 4 strikes. So let's say the stock's at 350. If you were at 345 strike, you want that to cost about $5.50 to $6 so that there's barely any theta. So one, if it's a good setup at the end of the day, you can swing it. And two, you're just playing the price action up and down. You're not worrying about time during the day. You're just playing the bars. And then if you get yourself a couple weeks out, your stop loss is going to be a lot easier to control because you're not going to have 30-40% swings. You're going to have 5 to 15% swings, and you're going to be much more consistent in your trading because of that. Some other general things I saw people texting me is, how do you know when to get in? If you're just day trading, playing these intraday moves like this are fine, but if you're swing trading, you got to play the bigger moves. So you got to look at moves on, say, the 15-minute or higher. So for me, I would draw my breakout zones here, so I'd take my wicks, my bodies to the top of my wicks here, and that'd be the zone that I would watch. So these are the last 2 zones that got rejected, and then I would make sure that I have a downtrend as well. So this is your downtrend on the bodies, so I'd make myself an alert. This is just if you're doing it yourself and you're not going off any software alerts or anything like that. So we'll go off of a couple of alerts that we saw on the server as well. So this would put me on a, you would set a alert here, so you go add alert crossing, and you could have it notify or send an email, or whatever it is that you want to, however you want it to send it to you, and that way you can have it pop up on your phone as well. Then when it gets in the zone, that's when you start to scale in, and when it gets out of the zone, that's when you go all into your position, whatever that is that you allocate. And then you can have your price target. So maybe your price target is to fill this wick. You want to capture that $3, $4 move there. Maybe you want to play to this trend line here. However style you have here, just let the price action dictate it. If you wanted to swing it for the larger move, then you're playing this flag, then you need to measure what that would be. And that could be the move to 365 over a couple days. Then you just set your trailing stop loss and your profit target, and you're good. Because because you don't have theta and you don't have a premium that you need to work about, you can basically figure out your price target. So if you bought, let's just say the 345s, I'm not looking up the price, I'm just using this for example. So let's write this out. So price target is 366. You have the 345s for, let's say, 716, just to, because it's the monthly, or maybe you have the August monthlies. Let's say you paid $6. Yeah, Facebook Lotto hasn't gone off yet. FYI. So let's say you paid the $6 or $600 for it. Might be a little bit more, but we're just doing this for simplicity's sake. So 345 to 366 means your price target is 2100. Let's say you got to go into a meeting. I would set my price target below that because it doesn't always hit your price target. So maybe you have a backup price target of 361. So you go in a meeting, you want it to hit 361.50. So you set a take profit or limit sell. You could do, I think they're usually called limit sell for 361 minus 345. So you'd sell it for $1,650. And that's what you do when you go in a meeting. So that would be like your strategy if you can't watch your phone. And maybe you would set a trailing stop loss, or let's say you paid 600 and you're up 10%. I would set a sell limit at 600 so you can't lose money. Or you set a trailing stop loss of say you're up 10%, you set a trailing stop loss of 10%. So you're guaranteed not to lose money. But this is like your profit target for if you do your charting ahead of time. When you get in the position during the day, you just set all these things up and you go about your day. You set your sell limit for your profit target minus a little bit, so you're always making sure you get it. And when you want to, if you're just getting in, maybe you just set a 25% trailing stop, and then later in the day, if you see you're up, you can move your stop loss up a little bit. But it makes it a little bit easier than having to check it all the time, and you control your risks a little bit better this way. Oops. Alright. Yeah, trailing stop losses will auto update, but maybe you want to tighten your trailing stop loss. So instead of 25%, let's say you're up 50%, you don't want to give half it back, you're willing to give 15% of it back. You could then update it from a 25% trailing stop loss to say a 15% trailing stop loss. I call this more of like a compressing stop loss, but brokers don't really have that built in. We, however, are working on this. So let's talk about how to know when to go in, because I think that's really what people struggle with, is how do I have the confidence to go into something? I'm just trying to catch up here. Alright. So let's go look at some of the alerts that came out today, and let's see. Let's look at a breakout alert. What's the first one that came out? So at market open, our breakout alert called Square. I don't know. This chart wasn't so bad. This is my old chart that I made a while ago. Looked to be working so far. Alright, so let's take off some of this stuff here. Called it literally on market open at 8:30. Yeah, we can cover some call debit spreads at the end. They're not super complicated. So I called it at 250. So right here, market open, and this ran up to 255. So we caught a $5 move on Square today. This said the target on the alert was 254. So it said the take profit target on our alert was right there. So this was a perfect, because you could have got in, played at 254, gotten out, and you would have made a nice little trade. So using the software when it works is fantastic. You could have looked at the chart, you could have seen the volume, you could have seen that it was moving, you could have seen that it was a breakaway. You would have set your stop limit basically at where it opened. So I would have done a little stop if it would have entered this zone, or below this zone. I would have gone below this. Sergio, I'm just doing some Q&A tonight. I'm not really doing some charting and everything. I don't have any crazy plays lined up either, so we'll just have to see how the market goes. Trying to do some reviews to help people make more informed and better strategic decisions. So, if you're looking at this on the 15-minute, you probably could have looked at it on the 5-minute as well. So if you had a 25% trailing stop loss, you could have set that right away. And it might have triggered right here, but you would have been up enough where you would have made probably 10-15%. If you're watching it, then you would have played it up to the price target, and then just basically watched the price action until it broke the uptrend here. What's another one? Piton. Looks like this one came out around the same time. So Piton called it at 127.26, right here. Alright, and this said price target was 131. So this had the price target up here. So this is one that did not hit the price target. And that's going to happen occasionally, you know, everything's probability. So if you had played this one to the T, based on what we had on here, you would have gotten in if it held 127. So you would have gotten in probably around here. You would have gotten in, because you wouldn't have gotten in here because it didn't hold 127. So you probably should have gotten in there, got above 127, played it up to 129, and then when we saw this tweezer candle here and engulfing, you would have sold right here based on candlesticks. So that broke the uptrend as well if you were going wick to wicks. So you can see the uptrend was broken with this bearish engulfing, and then you would have cashed out when it got below here, and you should have made, you know, 15-20% on that probably. I typically don't play stuff on open. I wait at least 5-10 minutes. The first 5 minutes are always going to be jacked. I'm just going off of alerts and charts and trying to talk about some things. We could pick one out later in the day. Roku. So Roku came out at 9:40. Let's see, 9:40 would have been 4:23:33. Right there. And this was a put alert, so this is a breakdown alert. You can see it went on to make a head and shoulders, retested the line, and then sold off down to a low of 418. So it came out at 423. First target was 420. It looks like it came down on the next candle to the, looks like it came all the way down to under 420. So looks like we would have made, you know, this zone right here is where we would have, looks like it came, opened right here. So it opened below here, came down, came back up, and then turned green. And you probably would have sold somewhere down in here based on the profit target and the candlestick patterns. So you can see this had lots of volume, signifying a possible reversal. Yeah, Gaston's got a good point. If you're playing the first 15 minutes of the day, you're most likely paying premium and you're going to get burned. So alright. So what are some problems that you guys struggle with that I haven't already addressed? Talk to me in voice, or you can type it out. Don't all speak at once now. So Super Fortuna, we usually buy on Super Fortuna. The Fortuna you're talking about, Tony, is the regular one, the technical signals. And that one is, we've been tracking the stats whether you buy on the signal or if you wait till the end of the day and you swing it. So a lot of tickers are setting up to reverse the next day. So a lot of tickers, the signals come out and go on and so forth. So the end of the day stats is just what the win rate is in the next couple hours of the next day. So hopefully that makes sense. Getting out of a trade not going your way, that's what I talked about, trailing stop losses. Or if it breaks your support line. So a lot of times, when I look at an alert or look at a stock that's trending, I'll wait for a familiar formation that I'm familiar with. So for instance, like Roku here. Just use this for instance. So you can see there's a left shoulder ahead and a right shoulder, and so then you can connect that with this support line right here. I would have gotten in a short right here, and then when it retested it, I would have gone in. Now, if this would have broken out here and got back up to here, I would have cut my losses here. That's one way I would have done it. My favorite technical setups, head and shoulders are always really good because you could play the neckline breaks. Pennants are really good because you just play whatever way it breaks. So let's say like this was a pennant here, just it's not fully a pennant, but you can kind of draw it out one. So this is like a bear pennant that's on a downtrend. So you could just play it whichever way. So this was a bear pennant, it broke down, it retested it on the next candle, and then rejected. You could have entered right here and played that from 436 down to 428. That would have been a nice short for a day trade. Now, again, whether you're swinging so one of the things that I've noticed, if you're day trading, 5-minute, 15-minute candles are good. If you're swing trading, you need to play the bigger move. So you need to follow the larger patterns. And that's when you look for, like, for instance, this looks kind of like it's going to bounce here soon. Because you have potentially, what the... Hold on, I hit something I wasn't supposed to hit. Alright, so... What happened? What happened? Alright, well, either way. So let's say this is a falling wedge here. You could just play a falling wedge breakout. So typically falling wedges at least retrace half 50%. So you could just take your zone. I'd probably put that zone in here. You can play that falling wedge breakout into that zone. So getting out from a downtrend, are you saying when you have calls? You can use RSI. RSI is also a good one. Typically when it's in the lower half, a reversal usually comes, and the same thing on the upper half. So if you were to, can I drag this on here? So you can see this RSI is extremely high, 86, and then you have divergence here. So I mean, I wouldn't buy calls on a downtrend unless it breaks it. Like, just why would you buy calls on a downtrend? So, for instance, like on this one, this downtrend, I would wait here, let it retest, and then you would buy calls right here on the retest when it bounces. Now, if you're already in a call and it's in a downtrend, I would just sell it, and then when it breaks, you could get back in if you wanted. So, technical setups: bear flags, bull flags, head and shoulders, cup and handles. Those are classics. I think Thomas said that the rising and falling wedges like this actually have the highest percentage of playing out. So a falling wedge looks like that, and a rising wedge looks like this. So I think it's like 90% of the time they play out how they're predicted to. I mean, if I'm showing you a falling wedge and you're talking about Roku puts, I don't know if I would. I don't know if I'd swing Roku puts at this point. Yes, there's a delay between YouTube and Discord. That's why I'm streaming on Discord and I'm live on voice with you on Discord as well, so you can talk to me in real time.
Hey Tom, I got a question.
Sure.
I have a hard time dealing with like gap ups and gap down. Like say I have a swing trade, and the market gaps up, and I think just like the way I think, it's like, oh, it's so much profit in one, a certain amount a lot of time, and I feel like it'll either just sell off really really quick, or just I'll lose all my.
So you're swing trading. Let's say you're swing trading a call. So like if you're watching my screen, let's just use this for example. So you're in Roku, you buy calls at the end of the day because this is earnings, but let's just use this as an example. So you see this morning star and a bullish engulf, and you're like, oh yeah, I'm going to swing trade that, right? And that gaps up the next day. What are you struggling with on the next day? What to do with it on open?
Yeah, just on open. Because
Okay.
I feel like I see on some stocks they'll sell off right away. Others will actually hold.
Yeah,
the
so
time
I agree with you. I usually have a pretty simple rule. You find the candle, draw a little box underneath it like that. Are you watching my screen?
Yeah.
So typically, if it holds, it's the general rule of the gaps. So if a gap starts to get filled, it most likely will be filled. So if it can hold the price action from the low of the candle, so like let's say watch the first 5-minute candle. So let's go on the 5-minute on this. What just happened? Alright, so you can see this one actually ran on open, but then quickly sold off. So you're going to take the wick of the first candle and you're going to draw your little box there. And that's going to be your stop loss, basically, where if it goes below that, then you're going to take profit. So if it gaps up and reverses, maybe you take a little profit off the table here. So you're securing some profit. You should always secure some profit when it gaps up, because of the uncertainty. Like you said, sometimes it's literally 50-50 sometimes on whether it's going to keep going up or going down. I would argue that it's more likely to fill that gap than it is to continue to go up as well. Typically, the only time you see it not fill that gap is when it's like a breakaway gap. So that's after like a long downtrend, or it's like a cup and handle that broke out, or it's creating an island reversal, that sort of thing. So if you're not familiar with those terms, just let me know, because I know I sometimes spit out stuff that people are like, I don't know what that is. Um, so for instance, like on this one, yeah, Nike was a good example of it where it gapped up and kept going. I would say that's more rare than it is more likely to happen. Um, so basically what you're doing is you're setting your little stop loss. I call it like a stop loss gap or a support box, I call it, on open, and then as soon as it breaks that, you would sell. And it may come down and fake you out and then come back up here. And this is a good example of that. And you're going to be like, God, why did I sell? And it's like, oh, it's mooning again. And then it comes back below and it just sells off the rest of the day because it's got no strength. And you're going to thank yourself a million times over for missing out on one profit. Like, let's say 1 out of 10 times you sell early, but you still made money. I mean, if you do this consistently and you're making money every time, missing out on profits 1 or 2 times to save yourself from losing profits 5 or 6 times is the name of the game. To be honest with you, like, watching a winning trade go to a losing trade is the worst feeling in the world. Like, knowing that you could have made $1,000 and watching it lose you $200 is worse than knowing you made $1,000 but you could have made $2,000 because it kept going up. In the end, both of the ways I'm talking about are making you money, but one, you're getting mad because you missed out on some potential profits. The other one, you're getting mad because you gave profits back. Missing out on profits is way better than giving profits back, in my opinion. So, like, if I like to buy like at least 2 or 3 contracts of a play at a time. I understand sometimes you have a smaller account, maybe you only can get one. That's all or nothing. But I'll tell you what, taking 10-15% on a small account consistently will eventually let you play with more than one contract. Chasing the 200-300%ers are nice, but it's hard to get those consistently. I know we hit them in the lottery occasionally, but I mean, look at my lottery plays this week. They haven't been hitting very good. So it's not like they're winners every time, and that's why I say go light on them. And I try to make them less than $100 each time, so they shouldn't be like super expensive. But does that answer your question, I guess?
Yeah, it does.
I do have a video on gaps. You can just type !gap if you want to watch it. I think it's like 5-6 minutes. I explain the different types of gaps, and I explain what types of gaps like to get filled, and I explain some of the gaps that don't like to get filled. So there are gaps. In general, the rule is gaps like to be filled, but there's definitely gaps that don't get filled and don't need to get filled. And it's don't type it in YouTube. Type it in the Discord, silly goose. My bots don't work on YouTube. So, alright, what other questions do you guys have? I heard someone had a question about spreads. So, a spread is a capped gain, but it also is controlling your losses. So it's a way to mitigate loss while playing things. So I like Baba. There's China stocks have been getting absolutely annihilated lately. Unfortunately, we played a $30 move up and it gave it all back, so it's been a little frustrating for all of us. But I still like the stock long term, and I'd feel very comfortable going with it long term. But you got to give yourself some time on it. And honestly, wait for it to reverse to put any more money into it if you got money into it. And then when we get a confirmed reversal again, then maybe average down or put some more in. But it's still a really good stock that's fundamentally undervalued. And China will come back eventually. So I know you guys like talking about Roku because I have it on my screen, but I'm literally just using it for examples. So, Nabil, how do you find a price target on a play? I do have a couple videos on price targets, but it's kind of, each different formation kind of has a different price target in mind. So the simplest one is just to measure the move and then use a little extension tool. So that's in here. Looks like this trend-based fib extension. So for me, like, if I wanted to know what the breakout on this would be, I would go up to the high and then low, and then my price target on this breakout probably would have been from here. Yeah, 329. If it breaks above that, then you just move to your next level. So, for this, you can see the price target with the full extension was 339. Hit that, came back down. Now that's one way to do it. Another way to do it is with trend lines, and you can see this is a really nice trend line. You can make a channel, so you just clone it. It's hard to see the channel before it's made sometimes, though. That probably would have been my channel there based on the consistencies down here. And so then, that way you could have seen when it taps the top of the channel, you could take profits there as well. Yeah, you should be able to do a trailing stop loss in Tastyworks. I don't know why. I think too many people don't scale enough. Me and my internal team talk about this a lot, because even like I have a lot of coders on my team, but they're not necessarily like super awesome traders. So they ask me a lot, how do you like if you buy 5 contracts, maybe you don't have on your chart, you just take profit at 10, 15%, 20%, 25%. You just every 5% it moves up, and you just do it that way consistently. And then you have a trailing stop loss for all your contracts at 15%, something like that. You got to design a strategy that works for you. But one of the reasons we track all of our one of the reasons we track all our stats is so that we can help design strategies. So, sure. Let's see. How do I know when to scale in? So, let's find a formation here. Where's the one we just played with at the end here? So let's go to the hourly. Alright, so let's see, where's a good... Well, here. We'll do this. So you can see on the hourly here, we'll move this down to the 15 minutes so we can get some more candle action here. Alright, so here's kind of a bull flag formation right here, right? Why is this not working? So you got your bull flag right here. So let's say you're going to allocate $1,000 to this position. This one's not the best example, but okay. So see this breakout here, 15-minute. If you're day trading it for an entry, you go on the 5-minute. So you would have broken on this full body candle right there. You probably go in there with half your count, and then when it came back down right here, it looks like it retested this breakout right here. So it's retesting this right here. Bounced. You could add in the rest of your position on the confirmation of a breakout here. And this is a confirmed move because you can see the volume is increasing on each candle. So you can feel very good about this. And that ran all the way from 444. I ran almost $20. That would have been a really good play. So you have a solid formation that you trust, a bull flag. You have breakout with increased volume to confirm it. That's something I always say. If you're getting a big breakout and you want to know if it's going to keep running, watch the volume. If it's crappy volume, don't go heavy. Maybe go a third position in, and then when it confirms a breakout even more over the next resistance levels, that's when you can add to your position. So hopefully that helped you with scaling in. So I had a question from Discord here. How do you talk? Can you talk about emotions and controlling fear and greed? If you play the market long enough, it'll kill your emotions and you won't have any problem with it. No, you still get emotional, but it's definitely hard when you, especially when you're playing with money that you can't really afford to lose. You're going to be more emotional and you're going to make mistakes. That's why if you're going to play options with money you can't afford to lose, I probably wouldn't do it. I would do it with shares because it's much more stable, and then use a small portion of your account to dabble in options. So let's say you have a couple $1,000 that you're ready to start trading with. Let's just say it's $2,000 for example. This is money that you need, but you're trying to grow it, so you want to do something with it instead of just putting it into a savings account. And so maybe you put so the problem is with small accounts is usually there's a reason they're small, because you don't have a lot of money to begin with. The whole reason you're trading is to get more money. So you're naturally going to be more emotionally invested. So you need to play safer strategies with money that you're emotionally invested in, because otherwise you're going to get paper hands, you're going to miss out on things that you should trust your TA and trust the moves. So for instance, with that, I would probably play spreads, I would play far out, I would play shares. I would tend to not swing large positions as well. So how do you let me finish my thought process on this. So I think there's days, I think we've all been there, where like everything looks great, it's following your TA, you get in, and it immediately reverses because it faked you out, and now you get trapped in a losing position, and you say, no, I'm going to trust this, it's going to bounce, when you know it's not gonna. You're just convincing yourself that you're not wrong, but deep down you're like, yeah, I should have sold, because you didn't trust your stop loss at 25%, so then you hold it down to 50% and you finally sell it. It's better to take the 20% stop loss, wait for it to find a bottom, and then get back in my opinion, or go find something else and just move on. Or, for me, I set limits, so my max loss on a day is 10% of my account. So let's say if my account's $10,000, if I lose $1,000, I'm done for the day. It's clearly not working that day. I'm not going to revenge trade and lose more. If my goal for the day is 10%, I may make $1,000. Maybe leave a few runners if I make a little bit more, but I'm going to move to cash, and I'm going to let the runners go because it's above my threshold, and I'm not going to overtrade. I think overtrading is one of the things that people get in trouble the most from. And if you are having struggles, take a few days off. I call it mental trading. Tell yourself, if you're mental trading, follow your TA and say, I would have gotten in here. Go look at what the contract cost. You're going to get a little FOMO this way, but it's going to give you confidence because you're going to mental trade or paper trade, however you want to do it. I just do it mentally because it's just easier. But let's say, okay, I got in here, this contract was $10, I saw it go up to 20. My TA says I should have sold here. Yeah, it kept going up, but I would have gotten out here on this uptrend break, and I would have got wicked out right here. So mental trading is a good way to take a break. You still kind of feel involved, but it helps you test out your TA so you can get your confidence back. And then when it starts working again, you've had a couple mental trades that go well, then scale in lightly. So don't go in, like if your normal trade is $1,000, maybe go in with $200 or $300. Start out with smaller trades, and as you get your confidence back and start following your charts more, that's when you can start to scale in and go back up to your normal position. I mean,
really well said.
What's that?
That is really well said, and I really like the topic that you've had this evening, and I for one think that you should maybe elaborate on it another evening just for other people.
I'm going to try to do these weekly. I'm not going to promise I can get to them every week, but I'm going to try to do these more often where we talk about risk management and how to avoid losing money. I think that's general. How do I avoid losing money and how do I become more consistent? That's what some of the new people struggle with. Even long-term traders sometimes struggle with that when they try different strategies. So, Justin asked, what % of my portfolio do I put on a trade? That's a loaded question because one, everyone has different risk percentages. If you're asking me in general, I have a higher risk tolerance, so I would never put more than 20% though. Now, if it's $1 million account, I wouldn't put more than 5%. But if you have a $2,000 account, you probably shouldn't do more than 20% because you always want to have at least, and for me, like having what I call a black swan event portion of your account. So always having at least 15 to 25% of your account in cash for something that like is news based or something that comes out. That is what I call a not miss event. If you're already in tons of trades and you can't miss out on you're missing out on a not what do you call? If you're missing out on an event that you can't miss out on because you didn't properly control your portfolio, black swan events can quadruple your accounts sometimes if you play them correctly. So what I would call as a black swan event, if you guys were with me a couple weeks back, we were watching the news on Biogen, and we saw Biogen got halted, which means news was coming out. And then we heard a rumor that they were going to get approved, and that LLY, here I can pull this up on my chart, because this was a black swan event that you could have made a couple $1,000s on. So here, this was it right here. So we caught this trade right here when it was at 203. On live, in voice, if you were there, you remember this. So we were talking about it, and we're like, you know what? LLY has a drug in the pipeline that's an Alzheimer's drug too. And if Biogen gets approved, there's a good chance LLY's drug is going to get approved. And they're not halted right now. So it's going to run in unison with it. And by the time Biogen got unhalted, LLY was already up $30 from when we alerted it. And this was literally a once-a-year trade. You only see these types of black swan events a couple times. But you could have taken a couple $100. Yeah, Leighton, you did it. I knew it. I was like, it wasn't me that identified it. It was one of our members. That's why we're a team. But when we identified it, we got into it. And so, Leighton, I hope you played it as well. But this was a $2,000-$3,000 returner. If you had 25% of your account, you just quadrupled your account with just a quarter of it. So that's one of the things why you always got to keep cash for that can't miss play. So that's just a little tip and trick that I think everyone should. Even if you have $1,000 account, always keep $100, $200 in cash. Then, you can't ever go to zero either. So there's a dual purpose there. It's like a backup. But man, this thing has been moving like crazy lately. So alright, try to catch up on some questions here. I'll go for maybe 10 more minutes. I was going to do about an hour here. And then, like I said, we'll try to do these more often. I'm going to try to get Thomas and a couple different perspectives on here too. Because Thomas is a more long-term investor, while I'm more of a day trader, and so my philosophy might not match your philosophy. That's why we have a diverse team here as well. Yeah, Rana, paper trading is fantastic if you're new to options. Sensational. How many stocks should someone hold in a long-term account? That's more based on your size of your account. I mean, typically you want exposure to every sector, so you pick your favorite stocks from the 10 to 15 sectors that you want to watch. So I have a sector watch list that I use. Sector watch list. So I have a whole bunch in here, but there's a bunch in here, and then basically what you're doing with a long term is you're just rotating between hot sectors, ideally. Oh, thank you. Let's see. Yeah, I might start doing some live trading on YouTube. It's kind of a premium feature for our guests, or for our standard members. But maybe I'll start doing it once a week or something. We'll see. Not gonna commit to that just now, but I do think I might start doing that eventually. Do I just trade options or I do shares? I did Newegg shares today, so I do shares. Honestly, I'm going to be getting more into more shares because I want to get my large account more risk assessed, and I'm got an auto trader that's going to trade shares too for me. The goal is to get 1% a day through shares. So what we're going to do is set up an auto trader to trade Fortuna swings, and then just take half percent to 1% moves. And if we're doing that on a large account, that's going to be a really nice. If you're doing that on a $100,000 account, you can gain $500 to $1,000 a day doing that with shares and auto trading. And I think a lot of people could live on $500 to $1,000 a day. So, all right, couple little time for a few more questions here. For swing trading, how do you know to average down or get out? So again, that's going to come down to your support levels and making sure you set your support levels right. Is it controlling the trend, that kind of thing? So typically, when for instance, let's see, let's just pick ARK. Why not? If you're doing a swing trade, you're probably trading on the 15 to hourly. So let's say you're swing trading puts on this because you see this bear flag. So the next day, let's say the next day it opens inside here, but let's say it opens above here, so you're down a little. So if you wanted to average down, what you'd look for is for it to bounce off here and then come back down here, and then you would average down right here. And then if it went above your line here, so let's say it broke out above here and started filling into this gap over here, just broke above the most recent highs here and you're playing puts, you would just cut your position for hopefully a small loss if you played the right work. Michael, can you elaborate your question? I don't know what your question you're responding to. Ford and American Airlines. I didn't really follow that. Again, it looks like you got out of the money weeklies. I'd have to look at their stocks. So let me ask okay, so pre-market watch list. Typically, I'm looking what's moving in the pre-market. I'm working on creating a volume scanner for pre-market. If I can find one online, I'll link it. But typically, you want to know what's got above average volume in the pre-market. I usually just wait till 15 minutes into the market open, and then I'll run our volume scanner to see what's got above average volume. Now, other watch lists that you gotta have, I have a whole bunch of them. So I have my alpha list. I have biopharma, crypto, cybersecurity, oil and pipelines. I have my sector watch list, short interest. I mean, all of them are different ones that I like to watch, depending on what's hot in the market. So, um,
I will mention one thing I've seen that has worked kind of effectively for some people trying to do quick in and out, and especially on shares, if they can do shares in a day, is that the volume turnover percentage. If you can watch that within the first.
can you elaborate on that a little bit? I don't know if people know what you're talking about.
It's the percentage of the volume percentage versus the actual float that's involved in a company. So you'll see this on a lot of the little like pump and dump stocks, which I really hate to advertise, but I mean, if you see one of them that has it, and you can set up certain screeners to do it, and you see them, they're going crazy in the first 30 minutes or so. They've already been pumping in the pre-market, and they do have options. Well, it's a good chance that thing's going to run all day.
Yeah, that was with me with Big C today. So Big C actually didn't turn out great, but I actually got out with really good profits. So Big C gapped up on market open and it had huge volume, so I knew it wasn't going to fill the gap right away, and then it pumped all the way to 72 and rejected it, and then it couldn't hold 70. So I sold between 70 and 72 all my contracts. And I had a few runners I left, and then when it started filling the gap, I sold all of them. Now it came back throughout the day, and that's because it filled the gap and it had volume, so people still believed in it. And you could have played that from 66 back up to 70 again, but it's one of those things where you knew this was going to be a good one to play because the volume was just so high, but the RSI was so high it needed to cool off, it needed to fill that gap, and now we can trust the move a little better, for instance. So, all right, I'll do a quick look at American Airlines.
It can play. It can pay. Yeah.
All right, American Airlines had some tuna calls, had good volume in the last candle. It was green. Aftermarket doesn't look amazing. Oh man, that thing got sold off. So I'm assuming you got into this because it was a strict tuna play. It had a high win rate. I mean, the RSI is extremely low. If it doesn't hold this is going to come down really far. But I would expect it to bounce a little bit. It's kind of at support pretty good, so
I'd agree. I see support. I also see a.
I mean, I would think it would at least bounce back up into this zone right here, somewhere between $20 and $21. So, or was that 2060 and 2090? So you should be able to capture a 30-40% play on that. Ford. That's a similar setup. It's got a gap up here. You're going to want it to come up and fill that gap around 1450. I don't like the red volume candle at the end of the day. It is kind of bull flagging though, so it does have this nice channel trend down. So you're going to want to play that up to 1340 or 1440 to 1450, and that zone is going to be play that 20 cent move. It does also have another gap up here, up at 1490. So just watch the price action on open tomorrow and go from there.
Hey Tom, do you find using the RSI for intraday trading a little more effective than the MACD?
I don't use MACD. I don't think it's useful personally. I've tried for a while to use it, and I just found it to be a lagging indicator that didn't tell me what I wanted to know. RSI I found very well. When you get in that intraday high RSI on the 3 to 5 minute. So let's say like you have your 3 minute RSI. You see when it starts to get up towards the 65, 70 area, that's typically a red flag, and you'll either see the stock start to go stagnant to lower the RSI after these big pumps, or you'll see it take profit there. So MFI works really good too. Money flow index is very similar to RSI. They have similar actions. You can even, I think Dan from Ventura uses he uses an MFI sell indicator. I forget which one he uses, but probably ask him tomorrow. Or if is he in? I think he's in here. Looks like he's in here. I don't know if he's AFK or not, but maybe he could link his MFI indicator he uses. EMAs work pretty good. I don't typically use them. Avery is I think EMAs is what he uses the most. I just haven't found a consistent way for myself to use them, and I think that's what it is. Is if you find a strategy that works for you, stick with it and don't make it complicated. City doesn't look bad. It's holding down here pretty good between. Yeah, I would take 67.50 as my stop loss. And if it gets back over 68, this thing could really go. So Kurt, it looks like the shot play might be over. That was a Avery play, so I don't want to speak to it too much. That's his baby. But it doesn't look amazing anymore. I mean, it had that nice run to 1600 almost. I mean, that was that was just a crazy play. It went from 1440 almost to 1600. You know, he caught a $200 move almost on it. So you got to be happy with that. And I think it needs to cool down a little bit. But all right, everyone, I'm going for about an hour now. I think I'm gonna call her a night. Gotta get some sleep so I can get up and trade with you all tomorrow. And actually, I want to check something real quick. Oof, Baba's not doing so well. It's painful. Man, this thing's going to be so nice to play it when it starts going back up again, but it's been painful to watch the last couple days, to be honest with you. Ever since July started, it had this just awesome run from 200 up to 230. This thing will probably open around, I mean, if this thing doesn't hold 200 in Hong Kong, it's going to be a bloodbath. So we'll keep it on watch. I won't let people hanging on it. I think the weekly lottos on it are done, though, unfortunately. So hopefully we didn't put a whole lot into that. So everyone, we'll keep hanging out in the Discord. So if you have questions, let me know. I got to catch up on some conversations. If you did DM me some questions and I wasn't able to answer them, just let me know in a DM, and I'll try to get back to them. We'll go from there. See what futures are doing real quick. What just happened? This doesn't seem right. Our futures. Oh, I gotta look into that. I thought futures started a while ago. They just tick. Futures just start. I don't know, something's not going on with that. Alright, everyone, have a great night.
Have a good one.